Come one, come all, come on down and get the Hollywood trades one more time. We do not flex random call outs around here. This is just all scientific price action. I'm going to start with gold. I'm going to make this quick because I need to take a nap. Just got done working on some other stuff, and we are back at the market once again with gold. This is just anybody who follows you know we're using these candle levels as our range. And so this candle range here is the bar that we would call our mother candle right now. It is the only candle that has had a test of its higher low in this range. This is definitely the overall mother candle, but we cannot use this range as it is too far away. We have developed two new ranges here. So this is what I believe is our goal. We had a bullish candle, so as you know, as we all should expect, a bullish candle should be followed by another bullish candle. Now, this may be a Fibonacci retrace. We are not ruling out the fact that this might be some Fibonacci type activities. There's going to be heavy profit taking above this high and somewhere up in here because of this Fibonacci range, or I should say maybe not even a profit taking, because a lot of the longs are going to want to target here. This would just be short entries. I do expect on gold, after clearing such an imbalance like this, for it to continue into the buy side and crack this one more time easily. So these shorts would just be used as payment. That's what I would say. For that, that's why I do not have it marked. It's just not what we would expect out of gold. Let's go ahead and break down to the 4-hour. I'm actually going to bring in a special chart here, which is the 2-hour in just a second. It shows you, because sometimes you don't get your order blocks. That you won't get, because in the lower time frame, there will be bearish blocks in all of these wicks that you don't get to see. So you would just use the wicks themselves as an inferred instance that there are bearish blocks in there that should act as support because they got closed over, right? So with that being said, we do have a support zone on the 4-hour, which is the body of this candle here. This imbalance range will be used as support after it got closed over here, and the range got cracked here. So all of this should be used. All of the bears that were in here should be using this as an opportunity to leave the market. As we see here, we are not looking like we're going to get that bullish close that we need in these 12 minutes. It may be an algorithmic algo magic, as I call it, to get over this, but we are closed over this level, and this level. So we do have some bullish levels to play from that should act as mitigation for the bears to leave out of these candles here. So we'll see how that goes. This support area is active, and this, as we see, is my target so far. This range is bearish, like I said, so I don't, this is not a high probability as of yet, because we don't have any bullish imbalances in this range to really support the idea of going long. This is just all speculation at this point on how we're closing in this range and how we're using this candle's body. I'm going to go ahead and break it down. Let's go ahead and break it down to the 120-minute chart here, because I do have some markups here. So on this chart is where I'm seeing what we're looking at with this candle's body being used so far. I'm not even going to mark that. Matter of fact, I'm going to keep it just for you guys. That is a bullish key level. I'm going to keep it on this time frame because it will not exist on any other time frame. Time-based highs and lows are what create supply and demand ranges ever since candlesticks were created. And so looking at different time-based highs and lows and body levels, you really start to determine really what's going on here. in a lot of instances. And so we do have this level here also now as a bullish key level. So we're going to see how it treats this range. If it just continues to crash back through this range, we know for a fact, I would say we are bearish, because if we're getting bullish closes and then it just like nothing, like there's no shorts leaving out. So that's what you'll see. You'll expect it to come into it, but you expect those shorts to be getting out and then it to kind of levitate. And then the bulls will have more bullish levels after that to achieve our all-time high goal right there. Anyway, let's keep going. Don't have much time. This is where the finale of this range should be seen, as we do have a really nice imbalance there, plus the breaker support range where these bears got broken. A lot of them got broken out of their stops. A lot of them are still stuck. And we should be using all of this as a levitation zone for the price to just fail to keep going, because those bears are getting out. So that's what we should see as it's dropping. We do expect it to retest after every break. We expect a retest of the range that caused the break. This is just price mechanics. I like to keep it simple, as everybody knows. And that's pretty much what I have right now. I don't like to break down into the smaller time frames for gold. It's pretty much pointless, because this is all going to tell you what you're looking at. If you want to break down into the 15-minute and lower, just keep in mind all the candles are ranges, all the ranges are ranges. And so we do have this right here for the 15-minute. That is the nearest support zone on this chart, where you would look for buys after bullish closes. That's pretty much it on gold. And I will see y'all later, maybe on in the day if anything exciting happens. But this is pretty much clean and clear on this one. Share this with a friend in need of true levels, and adios. I am out.